a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about lumber and timber ETFs. And we all know that lumber is currently the hottest commodity on the planet, and if not on the planet, that at least in the US. Lumber prices have actually tripled over the past year, and that is mainly because of this mass migration to the suburbs due to record low interest rates and work from home policies, which drove a demand for suburban housing. And also there was a lot of demand for home remodeling because people had a lot of time. They wanted to remodel their yards, their homes, and other stuff. And all that, plus a demand for outdoor dining too. So all that demand for lumber resulted in record high lumber prices. And what had happened last year in March and April, most of the sawmills, they curtailed production. They sent workers home to control the pandemic, and the economy was basically shut down then. So according to the Wall Street Journal, by April, about 40% of North America sawmills had shut down. And when the economy started reopening and there was so much demand for lumber due to housing and remodeling, then lumber prices started rising. And while sawmill production has increased, the US wood product output is still 16% lower than the 2006 peak when so many homes were being built. Now, this has resulted in a lot of profits for forest product companies, but not for land owners, because there's still a lot of wood in US South. So timber prices have not gone up, the logs prices have not gone up, but lumber prices have gone up. So sawmills owners, wood product companies, they are making a lot of money. Now, housing is expected to remain strong, and there's a shortage of inventory, particularly single homes inventory, which require a lot of lumber. So according to the National Association of Home Builders will need to construct between 1.1 million to 1.2 million single family homes per year to meet long-term demand. And that demand for housing and construction of new homes is expected to keep lumber prices at an elevated level and profits for these companies high. So there are two ETFs which are relatively unknown, but which have been around for a long time, and they have done very well in the past year. So let's take a look at them by going to the quote pages on Zacks.com. So the first one is by iShares. It is the iShares Global Timber and Forestry ETF, ticker symbol WOOD. This holds 25 global timber and forestry companies, has 414 million in assets under management, and has an expense ratio of 46 basis points. To learn more about this ETF, you can go to the quote page on Zacks.com. And you can read our research report articles, and you can go to the external homepage of this ETF, the iShares webpage, and learn more about the portfolio, including the geographical exposure. Now, these are companies, global companies, as I mentioned, so you will get a lot of international exposure. That is something which you should be aware of. So US is about 35% of the portfolio, Canada about 15%, then Sweden, Japan, Finland, Brazil, etc. And looking at the holdings, you will see what it holds. So West Fraser Timber, which is the largest lumber producer in North America, Canadian company, that is the top holding. And then you will see Rayonier, Weyerhaeuser, Potlatch, and other companies. Now the second ETF is sorry, by Invesco. It is called Invesco MSCI Global Timber ETF. Another interesting ticker symbol, cut and wood. So this is more diverse, so it holds 81 companies versus 25 for the earlier one. This also has global exposure. This is slightly more expensive with 61 basis point expense ratio, and it is also smaller with 109 million in assets. Again, to learn more about this ETF, you can go to the quote page on Zacks.com, and from there the external home page. Actually, this is cut. Sorry about that, but let's go to the Invesco web page for this ETF, and you can look at the holdings. So this has International Paper, Every Dimension, Westrock, Weyerhaeuser, Amcor as the top holding. So this is more diverse in terms of its exposure compared to the earlier one. And this is also more concentrated in the US, less international exposure compared to the earlier one. So 47% US and rest is international. And a lot of forest products companies in addition to timber companies. Now, on the last slide, I have the comparative performance of these two ETFs versus the S&P 500 index. And you will see that the iShares product is up almost 90% over the past year. The Invesco product is up almost 80%, whereas the S&P 500 index is up about 45% over the past year. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and I'll see you next week.